Today we're going to talk about one of the most important rights that investors have in venture capital, and that is the pro-rata right. Now, pro-rata in Latin stands for in proportion, and the idea behind it is that having a pro-rata right gives investors the ability to invest in proportion to their current ownership in the future. Let's say, just to keep the math simple, that you invest in a company at a $19 million pre-money valuation, and you put $1 million into that company. That gives, leaving you with a $20 million post-money valuation. In that case, you would own 5% of the company, right? Pretty simple math. Well, but what happens over time? Well, this company probably, if they're like most startups, is going to need to raise additional capital. And so let's say fast forward, the company's doing really well and they decide to raise additional capital at a $40 million valuation. And maybe they raise $10 million is what they're looking to raise, right? So this is $40 million pre-money and $10 million raise. In that case, their post-money is going to be worth $50 million and they will have sold 20% of the business. Well, what happens to your ownership in that case if you don't invest in that $10 million? So in some ways, this is a great outcome for you, right? Your investment just doubled in value because 40 million times that 5% ownership equals $2 million, right? And you only invested $1 million earlier, so you've effectively doubled your money. But the downside is your stake is worth $2 million, but the post money's 50. So you are getting diluted. And we can show that by showing this $2 million of value of your stake in the company divided by the new $50 million post money, which means your ownership now in the company has gone down to 4%. You just got diluted. You own less of the company. Now that can cause a bunch of potential problems for you. One, there may be certain clauses in the documents that say you have to own a certain amount in order to maintain your voting rights, or in order to maintain your board seat, or whatever it might be. And so if you don't invest more money, maybe that threshold was 5%. You had to own at least 5% of the company in order to maintain your board seat in that company. The other thing that can happen is you get diluted more and more over time, even when the company goes out, and let's say this trend keeps happening and you get diluted down to 1% and the company goes public for $1 billion, well, a lot of people would be like, wow, you own 5% of $1 billion company, but maybe by then you only own 1% of $1 billion company, which, don't get me wrong, that would still be an amazing outcome because you'd make, $10 million, which would be 10 times your investment. But what if you could maintain that 5%, in which case you'd be paid out $50 million? That's a big difference. And so for a lot of these reasons, investors will negotiate very heavily for what are called pro-rata rights. Like I said earlier, pro-rata means in proportion. And so a pro-rata right basically says that the investor has the right to continue to maintain their ownership in the company by investing more money. And so in this case, if I want to maintain my ownership here, the math is really simple. They're going to raise $10 million. I own 5% of the company, so I need to invest 5% of this $10 million in order to maintain my ownership percentage. And doing so would allow me to maintain this 5% ownership in the company. Now, maybe you can see one of the problems that this is going to create though. Let's say you have a relatively small fund and the company keeps growing and raising more and more money and more and more money. And pretty soon, maybe the company goes out and they say, you know what? We're going to raise at not a $40 million valuation. What if they raise at a $400 million valuation? That in turn means that in order to maintain your ownership in the company, you're not going to have to kick in $500,000. You're going to have to kick in $5 million. That's 5 times what you originally invested. And that can be really difficult to do. But the flip side is, if this is your winner, and this is the company that's going up and to the right, you probably want to plow in as much as you can. What a lot of funds have realized is that returns in venture capital are power law distributed, right? Which means that you have some returns that are generating the bulk of the total returns in the industry. And they've looked at it and said, why would I give up my pro rata right in these rounds further down the road when it may be a larger investment than I can make out of my current fund, but I have this right. Why would I give that up to some other new investor and not get anything out of it? And that has led to the rise of funds doing SPVs, where they've leveraged this pro rata right and they've gone back to their investors and said, hey, invest in this SPV and I will give you access to one of our very best deals. And we're going to charge fees, but they'll oftentimes be lower fees than we charge in our core fund. LPs love this. They get access to some of the best deals in the portfolio that way. And has also led to opportunity funds, where these opportunity funds sit alongside the core fund that the VC has for those deals where the company is further along and raises a much bigger round. And that round is such, like this $5 million is too big for the core fund to take down by themselves. And so they're able to leverage this opportunity fund to take advantage of those opportunities. Those oftentimes also come with slightly lower fees because they're opportunistic and sometimes they don't even get used. It just depends on the success of the underlying portfolio companies. If you're an entrepreneur and you're wondering like, what are the pros and cons of letting an investor have these pro rata rights? The plus side is if your investors have these rights, then it's usually a pretty strong signal that they're reserving additional capital for you later on down the road, and they'll be supportive and there with you throughout the journey. The flip side is that these rights also give them a little bit of a bargaining chip, and can lead to some complications on future fundraisers. Ideally, an entrepreneur will want to have as much flexibility as they can on their funding, and will be in the driver's seat of deciding whether or not inside investors have the ability to participate or not. Personally, I think it's great when entrepreneurs reward their investors that have been with them from the very early days throughout and continue to let them participate alongside them and continue to support the business and share in the success of taking those early risks and watching a company grow and succeed. If this video was helpful to you in terms of understanding what pro rata rights are and some of the pros and cons of them, check out some of my other videos, like the one where we're going to talk about the difference between hedge funds and private equity funds.